Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to run through Twitter, see what people are sharing on social media, generally related to three different topics: wealth building, commodities, and or financial topics. So I'll interject my opinions as we go, and we'll dive right in to what's being shared. If you want to follow me at Finance, and if you want to join our community, finding-value.com. We've got question and answer sessions on the weekend that you can ask questions directly to me. I do give midweek updates, and I let everybody know what I'm doing in my portfolio. I'm also going to start sharing a portfolio, and you guys can see the progress and how I purchase things and my returns directly related with that portfolio. May Day coupon code is still active. So we have Logan here. He says, to this point, we've had many housing recessions since 1942, but little nominal home price declines, excluding 2007 and 2011. So this is the history of the year and percent change in home prices. And you can see there's very little declines in home prices. We had 90, which had a minus 1%. And then we had that group between 07 and 2011 for pullbacks. And this data goes to 2022, which is up. 2023 was an up year, and 2024 is going to be an up year as well when looking at across the board nationally. So it's very rare to have these big housing market crashes like we had in 07, 08, 09, 10, and 11. That's a huge rarity. And what caused that crash were forced selling pressure, foreclosures, short sales, homes that were taken over by the banks. We don't have that same situation, in my opinion. Coming down to Lance, he says, on their earnings call last week, D.R. Horton CEO Paul got asked about rising resale housing inventory in Texas, Florida, and Southeast. Here's how the CEO of America's largest home builder responded. So Paul responded with, let me see if I can get this a little bit over. There we go. He said, I think similar to what we've seen last quarter and through today, yes, inventory continues to increase, not just in Florida, but across the markets. But we still feel good about our competitive advantage, especially in the price points that we operate in and with the incentive package and opportunity with being able to be flexible on rates. And so I don't think that some of the flatness in sales that you saw across those regions was significantly impacted by an increase in inventory. And we still feel good about the demand, just not as vibrant as it was in prior quarters. That's his opinion there. We got Julianne sharing the rig count. So the rig count was down 1 for oil, but it did increase 3 for natural gas in America. Charlie Munger says, recognize reality even when you don't like it, especially when you don't like it. Another quote from Warren Buffett says, all there is to investing is picking good stocks at good times and staying with them as long as they remain good companies. It's his opinion there. And a lot of his opinions are not about commodity companies. They're more about kind of these big, boring companies, food-related companies, insurance companies, things where the product or service that they sell to the end consumer doesn't really change. So he sticks with financial products, insurance products, food-related products, because you can build that business. It does well in a variety of market conditions, and it's more about selling more volume or product than it is about keeping up with the latest and greatest technology. So a lot of his companies that he chooses are more focused on the boring stuff than they are on the technology and things that rapidly change, where businesses get cycled in and other businesses get cycled out. He's in the Campbell soups, the mustard, what's that, Heinz ketchup, stuff like that. Coming down to Isabel Net performance. He says, given the U.S. equities are at record highs compared to global stocks, should long-term investors consider reallocating a larger portion of their portfolios to global ex-U.S. stocks instead of heavily investing in U.S. equities? And I think a big amount of this ridiculous outperformance here. Looking back to 1950, just look at this chart here, guys. Just look at this. Chart number 6 is no rotation from U.S. to international equities. Look at how far out of whack this is. And this started from 2008-9, and then we've just rocketed up the entire time. Do you really think it's going to stay up there forever? Big bubbles, the Nifty 50 bubble in the 1960s, which the commodity bull market came after this. The commodity bull market also came after the internet bubble. And we're way up here in no man's land. And in all honesty, I didn't think it was going to get this out of whack. But when things get this out of whack, it means money's rotated too much in one direction. I would be looking at international equities right now because of how cheap they are, and emerging markets. When this rotates and comes back down, we could go all the way back down to an overswing to the downside, which is very possible. I also think with the commodity bull market that occurred late 60s, early 70s, and also here, I think this is going to come all the way back down. We just haven't started that journey yet. I say yet. Haven't started it yet. So Robert Greene says, above all else, focus on acquiring knowledge and skills. Knowledge and skills are like gold, a currency you will transform into something more valuable than you can imagine. So he says acquire knowledge and skills. That's what's going to give you the biggest returns. Charlie Munger says, the young man who knows the rules, the old man knows the exceptions. And that is completely true. Because those who've lived through it, they try to find ways around things. They know the exceptions. Isabel, another one with the VIX. Historically, the VIX has tended to rise in months preceding the U.S. presidential elections, likely due to heightened uncertainty, while this seasonal pattern repeat this year. So this is the seasonal pattern that is repeating here. And it's heading on higher for the potential VIX, showing that volatility could increase before this. And it usually increases August, September, October, November. We are seeing the VIX move on up and potentially breaking a downtrend line. If you draw a downtrend line like this, that's what we could potentially see. So I guess the VIX does get a little bit more volatile around these presidential election years. Another one from Isabel next says, yield curve. Historically, a steepening inverted US 10 and 2 yield curve has often been an early warning sign of an upcoming recession in the United States. Another thing that also you'll see volatility increase too, which we've got. So the 2 and 10s yield curve steepening, which is coming on up, the uninversion, steepens in a run up to a US recession. We're right there, almost at that recession level. A lot of the times when you break through that level, you'll get a recession shortly thereafter. And you can see the recessions coming on up, breaking that 0 line, heading up, or the 1 line. It's where the 2 equals the 10 and it falls below the 10, the 2 does, if you want to know kind of what that looks like. His bet for rates, so if yields fall, I'm willing to bet the 2 will go down faster than the 10, and he's betting here that the 10-year yield falls and we do a retest of the breakout. That would correlate with the slowdown. And if you look, these green lines are recessions. So he's calling for a potential recession here and a pullback in yields for this guy's name. I don't know how you pronounce it. But that very well could be the case. We could see a slowdown, and we are seeing evidence of the VIX turn back up and the 2 and 10s are still inverted. It's not steepening as much yet, but it very well could. Here's Jorge, I think that's how you pronounce it. With the current level of oil rig drilling and well completion fracs, it will be very difficult to see past levels of oil production in the U.S. And here's a graph of those frac spreads, and you can see how low we are in 2024 compared to previous years of 22 and 23, which were much, much higher throughout the year. So cumulatively, we are way lower in terms of drilling and well completions. Mike Zaccardi says, B of A, S&P 500 statistically expensive on 19 of the 20 metrics that they follow. And then you can look at the percent above, and some of these are ridiculous. Like the trailing PE, 65% above the average. We've got forward consensus PE up about 35%. We've got the Schiller PE, which is up 100% above the average. And if we look towards the bottom here, we got enterprise value to sales 60% above. We've got S&P 500 in oil terms 155% above the average. The S&P market cap divided by GDP up 143% above the average. So we've got a lot of valuations that are pretty expensive compared to history for the S&P 500. Kate Kim says the SPY closes this week with a bearish engulfing candle, first time in 3 months. And there's that big bearish engulfing. I also noticed that as well. The bearish engulfing candlesticks usually are a precursor to a pullback. We can see one here, here, and here of all these previous pullbacks. Now, it doesn't mean that we fall off a cliff. I mean, it could mean that, but usually they're consolidations. So we could be starting a consolidation. An all-time high, 30% of the population have a stock portfolio worth more than $500,000. So a record high, 30% of the population of the stock market, more than 500 grand. So the current value of the stock market investments greater than 500. Current value of stock market investments under 10,000 is the blue line. So under 10,000, pretty stable at around 10, looks like 10%. And then the ones above 500, that's really ripping here in terms of percentages. And it looks like it's over 30% or so. So maybe some of that money and that, quote, inflationary wealth, nominal wealth, is making its way through the system here. Jesse Felder, Chinese investors dump record amounts of U.S. stocks and bonds. So Chinese investors are dumping U.S. securities, and you can see the trend there of the dump. Novel says, we waste our time with short-term thinking and busy work. Warren Buffett spends a year deciding and a day acting. That act lasts decades. So he really thinks about his decisions before buying something, and then he waits for a good opportunity to buy it when it's cheap. And then that action that he did take lasts for decades, and the time deciding what to buy. Art Berman says world crude oil and condensate, gosh, can't even say that, output is minus 2 million barrels per day less than the late 2018 levels. All world oil production growth since 2010 has been because of tight oil. So tight oil is in the blue. We've got deep water and oil sands in the yellow color, and then conventional in the green. And the conventional is definitely lower over 2016 and 2018. You can see those two big bumps there, and we are way lower than that. That looks definitely like it's rolling over. The yellow portion looks pretty stable, and then tight oil, it's tough to say, but it does look like it's definitely larger on the right-hand side than it is in 2018. The blue band is larger over here than here. So conventional oil is definitely rolling over, for sure. Then we've got XLE still holding on above support while oil takes a detour lower. And there we are right on top of it, the support, and you can see that we are still above all the support levels. We are coming back a little bit the last trading day, but it is still above support. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. And we'll catch you guys later. This is Finding Value.